How much of that is specifically is a kind of purer play on a relative basis on that kind of commodity trade that we are seeing right now? Are there, when you look at, say, investing in an Argentina, Brazil and Colombia even more so, kind of resource-heavy countries that are dependent on the cyclicality around commodities and their prices, are those mostly the types of companies that you are finding in a LATAM strategy, or are there other types of names that show up that may be surprising for investors out there investing in a place like Brazil, Colombia, or Argentina?
It's an important part of the story, but it's not it. I'd say 25 to 33% of the story should be that attractiveness of getting exposure to commodities. But Latin America as a whole has a fantastic reform story behind it right now from a political perspective. 2 years ago, we saw Javier Milei in Argentina kind of take over from Peronism and Kirchnerism, really bringing the political pendulum back to the center-right. A lot of people think that Colombia could be Argentina 2.0 in the forthcoming elections we're having in May. Brazil has elections this coming October, and all eyes are on political change that could drive fiscal reform, reducing risk premiums, and more flows into these countries. So politics is the other part. The other part is just valuations. You're getting dividend yields 6-7%, PE multiples at a 50% discount to the S&P. And in addition to that, carry. Brazil overnight rates are at 15%, with inflation around 4.5%. So one of the most positive real rate environments in the world, giving you stability from a currency perspective.
How do you juxtapose that with the Asian emerging market trade, which is not as tilted in many of those markets like Korea, Taiwan, elsewhere, towards the commodity story, and maybe more levered towards the technology, or dare I even say the AI story these days? How exactly, from an emerging markets portfolio manager's perspective, then do you kind of allocate or pick or discern where the fundamentals may be relatively more attractive in a place that is more geared towards things like the tech and AI trade, or more resource-dependent type stories?
I think you need to have both. I mean, we've already kind of covered Latin America. That's giving you diversification. It's giving you exposure to an under-owned part of the world. But Korea, Taiwan, the tailwinds behind the companies that we're seeing there are very strong. It's not just AI as a whole, it's the AI ecosystem. So whether it's the memory cycle, whether it's semiconductors, and top that all off with sort of capital market reforms that we're seeing in Korea with heavily discounted prices compared to what's already worked in the US, people are very interested. So we're using a barbell approach to have both sides overweight. But I think what's overlooked is very interesting are countries such as India, which was really just a gem of a market up until last year for the previous 5 years. It was a market laggard last year. It's come into the year underperforming by about for the first 2 months of the year this year. But if you see what's happening with India, GDP growth is at 7.8%. Inflation rates, low single digits. The central bank's cutting rates. Fiscal stimulus is strong. You have a very market-friendly government. And these elevated gold prices, 20+% of household savings lie in gold in India. So consumer confidence is through the roof. And I think right now, India is a really interesting overlooked place to see.
Okay, if I could follow up, Malcolm, you mentioned some of the kind of outperformance that you are forecasting for the LATAM trade in comparison to other parts of the world. Are there certain specific types of companies that you're paying close attention to with regard to where you think there might be future outsized returns? Are you looking more towards, people talk about factors like momentum and growth. They talk about value, dividend yields and that sort of thing. What factors are you the most focused on, and what types of companies do you think? Are you value shopping for some of these names now, or do you feel as though some of the names that have had momentum, that have stalled out a bit recently, still can resume that momentum again?
Yeah, we're a little more cautious on the momentum trades, on the big semiconductor trades, on the memory names that we're seeing out of Korea and Taiwan. A little bit more leaning more towards value, more towards cyclicals, whether that be across commodities. Within commodities, we like copper, we like energy, and we like gold. But I'd say our biggest overweight from a sector perspective is going to be in financials. Financials, so I mentioned Latin America, this potential rate cutting opportunity with extremely high positive real rates. So as rates start coming down, net interest expenses are going to come up across the board. But for financials, you're going to see improved asset quality, people borrowing more, capital market activity really picking up. So we think that's a sweet spot within Latin America.